What's going on, traders? Pat here. Hey, I just wanted to do a quick market review for today. It's July 12th, 2024, and to talk about coming back from a losing day. Yesterday, I had quite the losing day, and it wasn't too bad. I hit my max loss on my PA account and my eval accounts. And that max loss is there to protect my equity. It's a risk management feature that I use. So I was upset to hit that, and also I drew down my demo curve more than I would like to. So I want to talk today about coming back and reflecting on those things. The thing you really need to come back from something like that is you need to know that you have a working model. So if you're not profitable yet, the first thing you need to do is find a working model and then backtest that model till you know it works. Then when you know it works and you have a working model, you can trust that model. And then when you go into drawdown, you'll be able to trust that model to get you out of the drawdown. Now, uh, now the next thing is many times when you're going into drawdown, it's because you're not really getting back to the basics and you're not getting back to the core of what that model is. And so for my model, it's the inversion fair value gap. I learned it from Dodgy over at Dodgy's Dungeon. And part of the inversion fair value gap is first thing is you need to have a target in mind. You need to have liquidity in the market that you're searching for. And and so before you even take a trade, you should know what the draw is and where the market's going. Second of all, you need a setup under that context to look to hit those. And the setup has to be really good. It's got to be a nice uh, a nice obvious fair value gap that gets inversed. It's good if there's a liquidity sweep, and it's really good if there's a liquidity sweep and delivery from a fair value gap, and that's a plus setup, especially if you got an obvious draw. Uh, so so today is again it's July 12th. This is what the market did this morning. Overnight, we accumulated right here, and then we got a news candle dump. That news candle pushed down below yesterday's lows and into a data low from several days ago. There's a data low way back here on July 6th. Made that data low, and we broke through that. Swept that liquidity, so it manipulated down and then started distributing up. The first target we hit was the lunch high from yesterday, and notice how we pushed up above it and we came back, pulled back, tested it. And then right around 7:15 Pacific time, we see this manipulation leg down. It looks like it's gonna go back down to the bottom of the range. But we've got this nice strong move going up. And let's look at the overall context. Here's our 4-hour chart. We dumped down yesterday and we left this huge fair value gap right here. And oftentimes these moves down like this will get a 50% retracement. So we can just throw a fib up on there and measure from there to there. This is a dealing range because you took liquidity up on the highs and you took liquidity down at the lows, and our 50% is right about there. So let's see what it looks like on the 1 minute mark. Where is our 50%? I believe it's this one right here. We're running everything at 50%. So when you see a big dump down like that, can't find it. Let's find it right there. There it is. There's our 50%. When you see a big dump down like that with a big fair value gap, you see these 50% retracements a lot. So when we're down here, we see the manipulation down. We should be looking to expect a target upwards of 50%. When we're here at the lunch high after we take it out and we manipulate down, this one should be seen as a manipulation move because we're drawing toward that 50%, which is blue line right here. And also we've got a new week opening gap right here. This is a really small new week opening gap, but prices draw to it all the time, especially when they're down below. You can see the candle actually closes on the consequent encroachment of that new week opening gap. So on the 1 minute chart, we've got this little fair value gap. Anyway, I got interrupted here. So um, what we were talking about here is we had this manipulation below the PM low and the data low, and then the market started to distribute up. Our next major high is a lunch high right here, so we pushed up above the lunch high, and then we pulled back. This is where you kind of want to see some displacement, but if you go back and you look at the 5-minute chart, you see also that there's this fair value gap right here, and so we get some displacement above the lunch high, and then I want to see if we get some rejection out of this fair value gap, or if we go down and get some rejection lower. And as I was watching this on the 1-minute chart, I saw it tapped into the fair value gap and then rejected. And if you look at a 30-second chart here, this is that 5-minute fair value gap. And if we zoom in here, we see this really nice inversion off this manipulation leg. So this would have been a really good trade to take. I was watching this lifetime, but I don't have the second charts on my phone. But I wanted to come back and look and see if there's a 30-second inversion there. And sure enough, there was. So here you would have entered somewhere around here. Then you target 10, 12 points or whatever. You could have gotten 15 points out of the initial move, and I would have taken a runner up to here, up to the top of this leg, and then even a little bit further to the new week opening gap right here. Then if you zoom out, the next session high is way the heck up here. There's equal highs there. Let's go to 15-minute. Yeah, the next session high is way up here. Which would have been our AM high and an all-time high back on Thursday. So let's mark that one out because I don't have it. AM high, there we go. So in between there's some intermediate highs, and you can see them on the 5-minute chart where these are the highs. They rebalance a fair value gap. This one's an intermediate term high. This one's an intermediate term high. So those end up being targets you can take. Now let's redraw our fib for a second. So we were looking at possible 50% retracement. So this is our 50% line, and there's our internal high on the 5. And look what happens when we get to our 50%. It hits it and it just kind of stops. There's no displacement over there. It just kind of bangs up against it. And then it pulls back. So it pulls back right during the lunch macro time, right around 8:50. You start seeing this return to grab liquidity, and what does it do? But it delivers into this 5-minute fair value gap right here, and then it rejects out. And what do we have here is we have this 5-minute fair value gap, and this is what I look to see if it inverses. So right around the 10 o'clock hour, it starts to run up there, and right around 10:30, we look for a run on liquidity. And when I see this inverse of the 5-minute, that's a good one to take. And so, we were talking about, how do you come back from losses? And this is one of those ways. First of all, you have to get back to basics with what your model is, and you really just have to trade your model as a strip down how you learned it. And this right here would have been an A+ setup because we have fair value gap delivery, we have inversion of the 5-minute fair value gap, and we have an intermediate term high there and an intermediate term high there, plus a new day opening gap right here that we could tap into. And this was the one trade I took today. Now the thing with these 5-minute ones is sometimes they're kind of high risk. Like this, this could have been 28, 30 points risk on this one. So that's the other part of the equation, is you really got to watch your risk management. So on this one, I traded 3 micros, and I got in right about here, and I took a couple off right around 12 points. And then I ran the next one up to these equal highs right here. This is relative equal high. It's another low hanging fruit objective right there. got relatively high there. At any rate, so that was my day on Friday. So then just kind of recapping, coming back from a loss, uh, you you kind of have to look at what those trades were and just see one, did I trade the model? Ask yourself that question, and then two, did I exercise good risk management? And I would venture to say that most drawdown that you go into, if you have a really good model and you have a really good risk management and you follow that model and you follow consistent risk management, you should have upward sloping equity curve with minor pullbacks. I shouldn't have any major pullbacks. So Thursday through Wednesday, I had a little bit more of a major pullback on that equity curve. And I'm looking for, how do I make this thing bigger? There it is. Let's go to like 30 point. Is it gonna come back? There we go. Did I trade the model and did I exercise good risk management? Just those two things. And again, looking back at my results, yeah, I was probably sloppy on the model the last couple of days, and there were also two larger than normal losses, and so that just points to good risk management. So come back, strip down your model to its basics, find the A plus setup, find really good risk management, and then you start to dig yourself out. Do one, and then do another, then do another. That's all I got for Friday. I hope you enjoyed it, and we'll see you on the next one.